So if we think about data analytics, we've all seen all those astonishing statistics that have been published about the growth of data on the internet. And insurance companies, I think, are going to have more than their fair share of that data. From the insurance company's point of view, they're going to want to gather data from all sorts of new sources. We've heard all the stories about wearables, telematics in cars, fridges that talk to one another. So the sources of data are going to rise very significantly. The amount of data that they're going to have to manage is going to rise significantly. And then out of that, they're going to have to analyse it very carefully to make sure that they can actually get value out of it. Now, if I look at that from a tax lens, I think I see two things coming out. The first is the data itself. That, viewed from a tax perspective, is an asset. And that asset needs to be carefully understood and managed. And the second, I suppose, asset that comes into existence is the analytical skills that the company will develop. Essentially what will happen is that insurance companies will develop smart algorithms that can help them make underwriting decisions and help them assess the quality of risks. They will also develop teams of very smart analysts who can equally do those tasks. From the tax perspective, that also looks to me like an asset. And so we ought to be thinking very hard about where we're going to put that asset, how we finance it, what the valuation is of that asset, and then equally how we charge across the group for the use of that asset. That is obviously an area where the tax function is wanting to be very closely involved.